Well, we have a lot of stocks because we had that midweek holiday to track for you today, and we'll get to that in just a bit in our top 10 segment. For the time being, let's run you through the list. Paytm, Jubilant Food, Phoenix Mills, and PI Industries, they are stocks on the back of positive news flow. While we have Dr. Lal Pathlabs, Coal India, BPCL, Hindalco, Godrej Consumer, and Bosch, they are stocks that could open up with a bit of a red tick.
All right, Mark Matthews is now joining us of Bank Julius Baer and Company. Mark, great to have you back on the program. Thank you very much for your time. You know, here in India, we are almost nearly there at previous all-time highs, which is a very different situation compared to what we've got going in the US. But the dollar is also coming off sharply. It fell big time last Friday, and it's been down the last two sessions as well. What's going on? Are we set up for a bit of a rally in the US as well from here on? I mean, the extension of the rally we are seeing there?
I think you hit the nail on the head. It is the most important thing. The dollar has been profoundly inversely correlated with the world stock markets over the last year, and it looks like it's peaking. We think it is peaking. Both our technical and fundamental analysts think that, but we don't see it really collapsing. Frankly, we shouldn't want that either. We see a more of a neutral sideways trade in the dollar over the next few months, and the major reason for that is there's still a big rate differential between the euro and the dollar. But even if the dollar goes sideways, I think that's tremendously helpful for risk assets because 40% of the S&P's revenues come from overseas. Emerging markets, we know, have always had a headwind when the dollar is strong. And I overheard you talking about the gold price. I also think the gold and silver, great beneficiaries of the dollar peaking out here.
Mark, hi, good morning, and thanks for being with us. It's been an exceptional run for the Indian markets, and now the word on the street is that there's big money coming in from foreign investors, which could drive our markets higher. How are you feeling about India now? Do you think this is just the start of a long-term upcycle, or are we reaching a mature phase of the bull run?
Well, I suppose there's two kinds of foreign investors into India. There's the emerging market investors, and then there's the global investors. The emerging market investors, I think, will be putting more money into China because they don't want to get left behind if China opens up. And I also overheard you saying that officially China is saying they're not going to open up. But anecdotally, there's just lots of stories about tweaking here and there. And a sensible person would think, well, you can't remain closed forever because your economy will suffer greatly. And I must say that in my own screening, I found about a dozen very large Chinese stocks whose price-earnings ratios are numerically below their dividend yields. And an old Peter Lynch method of investing, Peter Lynch, one of the great value investors, he said, if you ever find a stock whose PE ratio is below its dividend yield, you just close your eyes and buy, no matter how bad the news is, because that's far too cheap. So, PetroChina, 10% yield, 3 times earnings, ICBC, about the same, actually. Therefore, sorry, I don't mean to ramble, but I think that the emerging market investors may gravitate more to China, but the global investors, they, I think, who are not in India presently, could come in if they're looking for alternatives. And it looks like real old-fashioned economy stocks, industrials, financials, things like that. They've clearly begun to outperform technology, and that would lead you to India.
Hi, Mark. Morning. Going by what you're saying, do you believe that India's at the upper end of the band? If China's going to, start attracting some money, we have been celebrating. Last couple of weeks have been good. The FIs have been showing us big money. Valuation-wise, we are much more expensive. But do you think that the Nifty, the Indian headline index, is at the upper end of the band?
Well, it is, but, usually stocks do go up, right? So there's no problem being at an all-time high because usually stocks are kind of close to their all-time high. Earnings grow and stocks go up. And looking forward, to my mind, the economic trajectory is a positive one in India. The INR obviously has been suffering. So if it's no longer suffering because the dollar is peaking, that's also something that will make it more attractive. On balance, I'm still perfectly fine with India. I think over the next 12 months, it might underperform the North Asian countries because they did so badly last year. But if we take a longer term view, we'd still like to be in India because of the strong demographics and all those things that I'm sure you're well aware of.
Yeah, no, absolutely. We'll have to. I mean, there is of course lead and lag, right? I mean, some markets do a lot better, price in a lot more, and then have to wait for things to catch up. So that's possible. Mark, so just a quick point on China. You said emerging market and global investors. What's the difference really, and how large? What is the pool size of emerging market investors and global investors? I'm assuming that global investors who are in emerging markets are global emerging market investors, aren't they? Sorry.
They are, but clearly emerging markets are a subset of global markets, and they're
Right.
a much smaller set. And I don't know the data, I apologize, but developed markets in aggregate are much bigger than emerging. So if you get the global investors who allocate, no matter if it's developed or emerging, deciding they want to put a little more into emerging because they can see the dollar peaking out, they can see the technology sector peaking out, and that's what obviously was responsible for the bull market in the US over the last decade, then I think India will pop up on their screens. And the emerging investors who already know India very well are probably allocated there. They could shift some money out of India to China because they see the upside in China in the event of a COVID loosening. On balance between the two, I think the global pool would be much larger than the pool that's dedicated purely to the emerging markets.
All right, Mark, we leave it at that. Thanks a lot for joining in and giving us your quick thoughts on the markets and how things are going to pan out from here. Virtually at all-time highs. So this market is roaring in the firm grip of the bulls, and looks like not much can change that, at least at the moment. Let's slip into a quick break. On the other side of the break, our entire research team will be joining in to help us with a list of top 10 stocks as we kickstart a brand new day of trade. Keep it with CNBC TV 18.